Yeah, we're a little past the first hour of trade here in New York, and the early tone is all about rotation and risk appetite. I'm Grant Mercer, this is Storm Stock Solutions, and let's bring some clarity to the chaos in today's market action. Since the last check-in, the story that's really crystallizing comes from small caps. According to reporting from MarketWatch's Isabel Wang, you've got a record rally in small cap stocks, but also a very real question about how far it can run if Treasury yields start grinding higher again into 2026. That's the push and pull we're seeing intraday. Small caps have been the upside leader, but the same move in rates that's helped reprice growth expectations could become a roadblock if it continues. So on one hand, traders are leaning into that small cap strength, seeing improving fundamentals after years of underperformance. On the other hand, the more rate story reserts itself, the more this leadership area looks like something to handle with care, rather than a one-way street. In other words, small caps right now sit at the intersection of opportunity and risk. The other big change this hour is the narrative around artificial intelligence. MarketWatch's Barbara Kohlmeier highlights research, arguing that AI skeptics may be underestimating the staying power of the theme, framing AI names as climbing the wall of worry. At the same time, a separate piece from Michael Brush is calling code red on some AI stocks, suggesting the boom is fading even as insiders rotate into more consumer-facing plays. Add in Christine G's report that Oracle may be the canary in the coal mine for big tech's debt-fueled AI build-out, via its credit default swaps becoming a way to hedge the AI debt cycle. And you've got a very mixed but important intraday backdrop. For anything tied to the AI trade, under the radar, there are a couple of themes developing that pros are watching in the background. One is the plumbing behind semiconductors and AI hardware. As MarketWatch's Charlie Garcia points out, ultra-pure water is becoming a strategic choke point for chip fabs and big cloud players. That puts a subtle spotlight on the niche infrastructure and industrial names that sit upstream of the marquee chip stocks. These aren't front-page movers yet, but if the capex boom continues, they could matter more as the day and week go on. Another quiet storyline is crypto sentiment. A piece by Charlie Sabgier notes that many young men are favoring Bitcoin over traditional retirement vehicles like 401 KSS. It doesn't move the S&P 500 on its own, but it speaks to a broader risk-on mentality and could influence how sticky flows are into crypto-related equities and platforms if volatility picks up. On the macro side, Myra Safong's reporting on the new $12 billion U.S. farm aid package is a reminder that trade policy and tariffs remain a background risk, especially for commodities like soybeans. It's more of a sector-level story for AG and shipping than a market-wide driver this hour, but if trade tensions escalate, that's the sort of headline that can quickly leak into broader risk sentiment. Into the next hour, I'll be watching three things. First, whether small caps can hold their leadership without another sharp backup in Treasury yields. Second, how the AI complex trades as those wall of worry and code red narratives battle it out. Names tied to data centers, cloud, and chip infrastructure are right in that crossfire. And third, whether we see any follow-through in crypto-linked equities as that generational Bitcoin versus 401k debate keeps bubbling up. We'll be back later with more intraday updates and then a full wrap at the close to see how these early narratives resolve. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.